Good morning, everybody, and welcome back to the Schwab YouTube coaching channel. It's the Monday edition of Trader Talk in today's market, and I am your host, Kevin Horner, joining you from our Denver studios. And today, as I get about once a month, I get to engage with my friend, Mr. Jeffrey Avalos. Jeff, it's good to see you on this Monday, bud. How you doing?
I am wonderful. Likewise, always happy to start the day with you, Mr. Horner. What a pleasure. Very much looking forward to what we're going to discuss today. We got a lot on the docket,
As
but
always.
I'll let you continue doing your thing. Thanks for having me on the show.
Of course, we love having you, Jeff. So today we're also joined by Brent Moores in the chat. Say hey to Brent, everybody. Brent will get to comments, questions Jeffrey and I are unable to, but we always keep an eye on things to make sure that we can engage with you along the way. Please feel free to post for the duration of our show. Remember, you can follow us all on X if you'd like as well. Try to post for you there throughout the week, give you some charts to look for, maybe some headlines to be noting. But that's a great spot to find us when we're not hosting on the channel for you here. And of course, you'll always want to make sure you're subscribed to said channel. So hit that button on the homepage for the Trader Talks channel. Now, with that, we're going to move to disclosures and then we'll get to the charts. So please remember that everything we discuss today should be considered informational and educational only. We do not make recommendations. We do not endorse a specific approach for trading the market. What we do here, though, as we review the areas, sectors, industries, etc., we will incorporate concepts of technical analysis as we review these areas. These are simply ideas, educational topics, thoughts for your consideration. The extent to which you use them is entirely your discretion. The one encouragement we give is to utilize technical analysis merely as one of your decision-making puzzle pieces, not the entirety of it. So make sure that you're balancing those entry and exit decisions against a few different factors. Now, if you are a new attendee with us on Trader Talk, this is our agenda. We follow a top-down review. So we'll start with our broadest of indices. We'll look at the S&P 500, the NASDAQ 100, the Russell 2000, probably check in on semiconductors, and then we'll get to a look of some stocks in the news as well. Now, with that, Jeff, let us
Yes,
start
sir.
with the S&P, sir. We have a little bit of a weak open to get us started, and yet every time we've had a week open of late, Jeff, they've been buying it up, haven't they?
Mhm. Yeah, we do. At least for the last couple of years, it seems like we've really gone headfirst into buying the dips. Now, this week is going to be very much an exciting one because this is coming off the heels of a pretty darn good Q1 earnings announcement. We've got the banks coming up this week. I think, Kevin, this could be an inflection point for the market. And as you see on that chart there, it's a bit of a wedge pattern. At least it was until call it last Wednesday, where things were coming together on the top side, coming together on the bottom side. But notice to the viewers out there, watch how Kevin is drawing this. It's a downward sloping resistance level. That was not great for market technicians out there who were trying to give a bull camp perspective. But the fact that we, over the last few, let's call it weeks, have broken above that, that's a little bit of a positivity. And then, Kevin, of course, we've got this week lined up. What I think a lot of traders are going to be looking at is, do we finally get above that 7,600 level or not?
Mm-hmm. Yeah, we've had one close that was in the vicinity here, closed at 760978. So that's our highest all-time close level. So we're about 50 points away from that, Jeff.
Mhm.
And at this spot, a lot of traders are going to say that's the path of least resistance, are they not? I mean, you've
Yeah.
been so close to getting there. And we can also incorporate the fact that we got down and tested that 50 days so cleanly and then followed it up with the test with a hammer candle that day and a follow through. Do traders take the initial weakness this morning as, hey, we're going to get pushed back, or are they more apt to look for a couple of those candles that have maybe been more instructive for us over the last few months?
What a great question. I think for a lot of traders, what we're happening and what's going on in the minds of them right now is we want to make sure that the news has been released before we put the cart in front of the horse. So what happens in that instance? You see a lot less volume. I really don't know what's going to happen. I'll wait until something starts to unfold, is the mentality of traders out there. So seeing lighter volume today, even tomorrow, certainly until the earnings announcements of the major banks come out this week, that is to
Mhm.
be expected. But what happens after that, I think, is really going to be the exciting part of this earnings season, Kevin.
Okay, well, I like to hear that. And I think what you're ultimately reminding us about is something we cover quite a bit in this class, of course, and that is the need for, depending on your level of comfort, looking for confirmation of trend, validation of trend prior to entrance. Again, we mentioned that beautiful candle from last week where the 50-day was validated, right? You built a
Yeah.
hammer on that day. That's the kind of candle that can give traders a reason to expose new dollars to a trend, right? If you've been waiting for something all the while, right? Through this consolidation, we made lower highs and matching lows. Some traders would have bought in on a break of the downtrend line. Some want to see a move higher and then the throwback to the breakout spot, Jeff, and then they get more comfortable. But whatever the case, defining one's confirmation is so key to giving us the encouragement or the validation we need to step in and either place a new position or add to a winner along the way.
Yeah, really well said. Also, the cool thing that you have right now, and as far as a setup for a trade on the S&P 500, if you get in now, you have a very quick potential upside movement. If you get that breakout and you get a
Mhm.
confirmation over the next couple of weeks through the earnings announcements, great. Now things are really starting to rocket. If not, you really have a very small risk ratio, meaning if you're looking at that 20 and the 50 period simple moving average as your potential risk level, you say,
Mhm.
gosh, if I have a break below here, that means I'm going to start to slowly trickle out of this trade. So you have a very tight risk to reward ratio in this instance, with the higher side being to that reward breaking above 7,600.
That makes so much sense to me as well because that tight downside is what will give traders reason and comfort to step in to positions along the way. It's such a good
Yeah.
reminder. Jeff, you can see we've been doing a little bit of work here as of the last week in the NASDAQ 100 with my many lines drawn in. The weakness this morning is largely attributable to technology. So we're
Yeah.
seeing the NASDAQ open weekly. We're off 1.25% right on the 50-day moving average today.
Yeah, this one's a little bit more of the story of rotation. You've heard this a lot throughout the last few weeks. To the viewers out there, this is nothing new to all of you. You've started to see market breadth start to expand, meaning you're not just having a bunch of companies in the Mag 7 or Mag 10 driving everything. Now it's other companies in different areas. Think healthcare, think industrials, think materials, starting to drive some of the movement in the S&P 500, while you're still seeing some of the weakness in the semis and in the S&P and the technology space, I should say, Kevin. So this is to be expected. This is actually quite normal.
Mhm.
This, though, is going to be a big read on what happens momentum wise as we move forward over the next couple of months. What I mean by that for the viewers out there is, if you do not have the very largest companies in the S&P 500 and in the NASDAQ
Mhm.
driving a lot of this movement, it's very difficult for everybody else to start to push us ever the more higher. Very similar situation in the economy. If you don't have the wealthiest individuals spending money, it's very hard for all the rest of us to make up those dollar differences because we just don't have the same weight to throw around, Kevin.
Mm. It's a great point. You know what else stands out on this chart to me, Jeff, is
Yeah,
how
yeah.
that
What are you looking at?
the 20-day is just meandering through price. A good reminder that we don't always trend against a speedy moving average. And in the midst of those consolidations, like, I mean, it's pretty obvious we're still in consolidation, I would suggest, as it relates to
Yeah.
the NDX here. Lower highs, higher lows, kind of, getting tighter and tighter in here. But ultimately, we can't really even look at the 20-day for any kind of trend evaluation because we're not trending against the 20-day right now. And that's
Well
just a
said.
reminder of what's happening with price. As price tightens up, we're seeing those major moving averages, the 20 and the 50, get really tight to one another again. So, it's kind of clear the areas we're monitoring. Could the 50-day hold up? Sure. But Jeff, would
Mhm.
many a traders say that the 50-day right now is more important than, say, maybe holding the lows we created over the last 3 weeks? I mean, we tested that level a few times now. If we got down there and held that level another time, is that instructive and strong for bulls, or is that going to scare the bulls?
Really good question. I think that would be more in the neutral camp, Kevin, because if you're holding that 50 period or you hold the level just below there, that's saying, hey, we're hanging on. We have a lifeboat, if you will. That is not saying
Mm,
we are cruising in a jet boat on the beautiful ocean waters. What that may mean for some traders is if you're looking at least at the NASDAQ, you may be in a more neutral range over the next couple of months. It really is going to depend on this earnings season. Now, for those of you out there that are saying, well, if we're neutral, what can we do with that? Take a look at your calendar. We've got some neutral trading strategies to take a look at those when you get the opportunity. But Kevin, without that break to the upside, that puts more pressure on the NASDAQ, meaning it's more difficult for somebody in a trader camp to say, well, I'm going to take a bull position on this. Instead, you're saying, should I start to trickle out of something that's already done well?
it's a good reminder. I think if we got down, so let me just paint a little picture here, Jeff. If
Sure.
we use this technology weakness this week, this weakness we're experiencing to kick things off, and let's say we got down again into this area of support, right around 20, let's call it 29,000 on the NDX. If we ended up down there and made a candle that looks kind of like that one,
Yeah.
or a one where we bounce at support, or we see bulls step in followed by a follow through day, so to speak. That's the kind of thing I believe that's going to it's going to strengthen that level, if nothing else. Now, trend traders aren't going to be happy because we're not holding the 50-day, of course. But
Yeah.
if we got down there and validated that level, it would at least give traders a level under which they would potentially get a little more defensive. And as usual, Jeff, what we talk about with technical analysis is not that it predicts what's going to happen, but it helps us to manage our risk a little bit more. Because
Yeah.
if we thought we were going to hold the 50 and we don't, well, then some traders would lighten up. And if you thought
Mhm.
that if we lightened up at the 50-day, then we could come down and test this level, and we test it but don't hold it, well, then that becomes an area under which more traders would get even further defensive. Yes?
Yeah, especially coming into the midterms, Kevin. Really good call
Yeah.
out. This could be a time where folks say, hey, some of these momentum trades just aren't working the way they used to the last few quarters. I'm going to
Hmm.
start to trickle out of this. I'm going to take some profits off the table. Sure, it's not at the high point that I would have liked it to be at, but I'd rather hold on to a gain as opposed to starting to experience a loss, Kevin. Really
Yeah.
well said.
I think you stated that well. Now, Jeff, I know this is the NASDAQ. We're just wrapping up here. I wanted to look at a couple of quick things. One, I wanted to
Sure.
point out on the heat map the extent to which we know the NASDAQ is not very well allocated amongst many sectors, right? We know when we
Right.
look here, you can see what we're talking about with the NASDAQ 100. It is heavy on technology, heavy on communications and discretionary, and then the lesser areas, staples and healthcare, are fairly limited in scope. So when the
Yeah.
NASDAQ pulls back, commonly it's because tech is pulling back. Now we
Yeah.
can do the same look at the S&P 500, of course, and we're going to get similar allocations, but not as well out of balance as the NASDAQ 100 is, for example. And the reminder here, as you were talking, and I realized we just didn't touch on it originally, it's really looking at something like the equal weighted version of the S&P 500. And you mentioned the broadening of this trend, and I thought it was pertinent just to make sure that everybody can visually see this, Jeff. Look at
Yeah.
how we just got done talking about the NASDAQ's inability to work with the 20-day because we're going sideways and in consolidation. But Jeff, look at how consistent the 20 has been here on the equal weighted version of the S&P 500.
Yeah, this is what you see in a lot of technical analysis textbooks. Holding on to a support, it forms this little ball bouncing off of the ground on an uphill movement. Very
Hmm.
beautiful chart for those of you that are in the bull camp. Why? Because you've got a defined support level. Kevin, really good call out. That 20 period simple moving average. Okay, very easy for me to spot that. Anybody could hand this chart to someone and say, hey, what do you think this is paying the most attention to? Give it to a 10-year-old and they go, I don't know what that orange line is, but it seems to be a point that this doesn't want to go below.
Yep.
Yes, great, really good call out. So yeah, I do for what you're saying here, I'd like we're talking about finding that support level and utilizing that as a potential risk to reward experience.
Yep, exactly that, Jeff. And the reminder that there's a bull market somewhere all the time. We
Mhm.
might be consolidating in technology here. We'll look at a couple of sector charts momentarily, but a good reminder that there are other groups that are suddenly providing opportunity and in bullish trends that are not specifically technology. We'll look at those. All right, Jeff, let's talk small caps today. Let me get back to, first of all, I'm going to go, let me see what I've got in there. Let's go to default, clean all this up, and then we'll put up my major moving averages on the Russell. So here, Jeff, the Russell has not been honoring the 20-day as consistently. We have made moves beneath it. There's been some pressure from the yields, notably the 10-year, for example. We'll look at that momentarily. But the trend has been strong, even though the tertiary details of the trend are maybe weakening a little bit. I'm going to call out the RSI down below.
Yeah, you've got the 20 period giving a little bit of a heads up, but it's broken below there a number of times as we can see on the chart here. Now, the good
Hmm.
news, I think, for traders out there that are saying I'm still in the bull camp of this market right now is we have gone below the 20 period before. So I don't know that this is a point where everybody says, let's start selling all of our small caps. But it is something to note. As I mentioned earlier in the show, it's going to be the earnings announcement that's really going to be driving these movements. News trumps all, as the saying goes. So
Hmm.
whatever the earnings have in store for all of us is probably going to dictate what happens with this small cap part of the market, Kevin.
I
Any insights on, do you think that we're not moving as high? Does that bring the 50 period more into play? Or do you think it's, gosh, that zone of the 20 is really still getting a lot of attention?
I I think the likelihood is that the 50-day provides more of a long range support here for the
Okay.
Russell 2000. Some traders, you know what, you might be utilizing the combination of the two. Under the 20, you might be eyeballing things, you might be a little bit on your toes. But under the 20, holding the 50, you might be comfortable. Some traders would use moves under the 20 as reasons for just lightening up and allow it to get back above the 20 before reestablishing what they consider to be full position sizing in the Russell. That's one thought process. You don't have to make any adjustments along the way, of course. If you're simply a 50-day trader, you've got, I mean, look, this has been pretty solid, Jeff. This is the 1 year look on the Russell. And if you're just simply a trader working with the 50-day, you've had very infrequent windows whereby you'd be a little bit more defensive, right? That's
Mhm.
it's pretty simple. It's very limited periods. This one was all of a week and a half, and this one more like 3 weeks. But as a good reminder, Jeff, sometimes, even though we've got bouts of weakness, it's the big moves that let you
Yeah.
know something is occurring. And this one in particular, the gap higher through the 50-day, we never got lower than it was right there. So that
Yeah.
was a wonderful point. And obviously, this is hindsight, Jeff, but often the case, Jeff, as you know, when we are watching these charts, if you've seen something like this happen in the past in a live market scenario, it becomes a lot more easy to see it in real time and then use it as a decision making piece, right? I mean,
Yeah.
that's one of the things you need. It's one thing to read it in a textbook or read it online or see somebody's case study about this concept. It's a
Yeah.
whole other to see it in the wild and then be able to make your own trades based off of it.
Yeah, the feedback mechanism seems to saturate our brains a little bit more when it's
Yes.
in a real account for some reason. Yeah, not always for the benefit of our trading experience.
Unfortunately, not always, but yeah. So we're watching this. The 10-year yield continues to stay elevated here. We've got, I don't know, Jeff, this is a pretty bullish looking pattern as it relates to the 10-year. Let's put all my moving averages up there. The reason I say that, we broke the downtrend line. So let me draw that in. And everybody knows that you break that downtrend line, and then that's a spot where some traders start to get a little interested. We broke it, came back for 2 days, tested it, and then we slingshot it higher. And it looks to me like you've built a bull flag that's been broken already. We're trading outside of it. So this is a pretty important spot. If you want to see yields down, this is a point where we'd like to see a reversal come into play. It's too early to call it that, obviously, but rising yields, we continue to digest them relatively favorably on the Russell. it's a little bit of a surprise to me, but how about you?
Well, the idea here, I think, for those of us looking at the fundamentals of what's happening, is you had Kevin Warsh coming on to the Fed and making an announcement. Now, what he originally was being confirmed, a lot of people were saying, well, he's just going to do Trump's bidding and he's trying to bring yields down as much as possible. I think the news announcement and him saying, hey, I'm not going to participate in the dot plots and I'm not going to give too much
Mhm.
information, but it did seem like he was open to the idea of raising interest rates at some point this year if inflation noted that. I think that's probably what's driving this big, quick up movement. Now, Kevin, I love your call out right here, and that is that potential flag pattern. These seem to be one of the strongest indicators in the technical world. And what are you looking for now? You look for that flag after this breakout to come into effect. So whatever that number is, and Kevin will pull it up here for us in a moment, about 1.4. Is that what
Yeah.
we're seeing there, Kevin? Yeah,
Yep.
just grab that, move it to the top. So the idea is you're expecting, in light of any news changing the fundamentals of this, you're expecting this movement higher to potentially break past that 46.5 level that we hit previously in early May. So
Yep.
in light of any news driving something different, I would say that's probably where traders are starting to look based on this flag pattern that you just called out, Kevin.
And Jeff, I'll be honest, I don't like it. I mean, I'm a trader.
Yeah.
I'd like to see these yields lower. This can be a headwind on the broader markets, most notably the small caps.
Yeah.
And again, they've been resilient. The trend has held. But if you're looking for a potential reason for the trend to not hold, rates moving through that last high at around 4.7. Remember that on this instrument here, we just slide the decimal place one spot to the left to get you the effective 10-year yield. So at 46.87, that's basically 4.687%. That would be a pretty high rate relative to where we've been, Jeff, and the market
Yeah.
probably doesn't like that. Now, there's a reminder that, as you said, we're not going to get as much transparency from the new Fed as we had been, according to what they've told us, at least. So that's an interesting way of announcing it, right? We're not going to be transparent. So we're going to transparently let you know that we're not going to be as transparent going forward. I found that to be a little amusing. Now,
Yeah.
we know that traders continue to position as though there will be hikes between now and the end of the year, potentially as many as two rate hikes. The market could be doing so organically without the Fed taking action here. We'll see if that plays. Obviously, jobs numbers and inflation are going to continue to have a decision-making factor for the Fed as we go forward here. So
Yeah.
we'll see.
Most certainly. Yeah.
Okay, Jeff. So there's your big three on the major indices. Let's see where the greatest amount of weakness is from today. It's really in the semis. Semiconductors pulling back down 4%. Now we've seen some volatility here, Jeff. The
Mhm.
rectangle I have drawn in looks like the area that most needs to be held if trend traders are going to assume that the stocks and the semis continue their upward trajectory here.
Yeah, the tough part for the Bulls is, boy, we had that big giant red candle breaking below the 20 period simple moving average, giving conviction to the bearish argument. And then you had a break and hold below that 50 for just a moment, but you had
Yep.
that nice little hammer pattern that you talk about, came back up, didn't quite hit that 20, and then pulled back down. Think of somebody trying to break past their ceiling and saying, gosh, this thing is just too strong. I would be concerned if you don't hold that 12,000 level, Kevin. And the reason why
Yeah.
is you've not only got the weakness coming off of an attempt to get back above that 20 period simple moving average, you now have a psychological number that's going to be on the eyes and minds of a lot of traders out there. If you can't hold that, where do we go from here? And very easily you could see the argument coming up for 11,000. But then somebody could say, wait a second, gosh, let's get some news headlines. If it doesn't hold 11,000, we could go all the way down to 9,000. Uh-oh, dun, dun, dun. And so you got that big, if it bleeds, it leads moment in the news there. But I would say, again, going back to the earnings idea, watch out for that. That's probably going to be your driver. Kevin, I would also say this too. During the previous earnings announcement in Q1, you had people coming out with good earnings numbers, good revenue numbers, but little tepid on the forward guidance. And boy, were those companies punished. I
Yeah.
would not be surprised to see if that is the same mentality going into this Q2 earnings announcement.
That's not a bad point. The future guidance, because it always leads with the reminder that the market's about 6 to 9 months in advance of what we're
Yeah.
generally thinking about, right?
Mhm.
The market is always discounting the future. So a lot of the rally has been built on future guidance, future expectations for spending and need of these chips. I'm not to, that, which is not to suggest that even Jeff, I don't think anyone believes that we're not going to need semiconductor chips anytime in the near future. In fact, I think there's still a belief that there's quite an undersupply on chips.
Yeah.
And yet, you could still see pullbacks that give us opportunities for potential participation. The level there is very important, as you called out. We're going to call it about right around 12,000, basically the lows we've created in here. But let's always just give us another visual confirmation. What about a Fibonacci move that we could validate to say, hey, if this doesn't hold where we are, might we be looking? Well, that 38% retracement levels around 11,750. That could be like an intraday swing low scenario, Jeff. Maybe we get a really weak open over the coming few days or weeks where we open at that 11,750 and then that brings buyers in, creating one of those beautiful hammer candles like you got right here. I mean,
Yeah.
that's a potential signal as well because the
Sure.
reminder is if you open at a very low area, but the bulls are there to defend that area, that is again confirmatory in nature. Now, I don't know that that's what's going to happen, of course, Jeff, but I am always thinking, hey, this could be what plays. And if it goes the way that I thought in advance, well, then maybe I'm a little more prepared to participate if that's what I'm looking to do.
Love where your head's at. Hey, got a question coming through.
Yeah.
I'm curious on your take on this discussion on why the RSI has been falling since about May 27th, this price increase. What does that normally
Yeah.
mean? Is there anything we can draw from that, Kevin?
Well, it tells us momentum is waning, no doubt about it, right? What we're getting is a essentially notification that the momentum is not as strong because we are opening at when we open at low levels, we are rallying, but when we open at high levels, we're fading. So we're
Mhm.
getting these weak moves that are not trending like we were through here. And I guess the reminder is you can always see price making new highs, even in the scenario where the RSI is not. But what we want to see is getting back on trend. And everything that we know about the trend remains the same, which is to say, hey, we were going like gangbusters when we were holding the 20. And then since then, it's been a lot of back and forth, a lot of two steps forward or one step forward and two steps back as maybe more accurate. And that's why the RSI is doing what it's doing. If we were in the midst of still running against the 20, we would probably still be seeing the RSI holding up a lot stronger. All it's telling us is what we probably already know, Barbara, and that's simply that things are not as strong in semi charts as they were not that long ago, just a month and a half ago, Jeff.
Excellent explanation. That's exactly what we needed. Thank you.
So, all right, Jeff, let's take a look at some of what's happening in the way of our sectors. Today, we know that energy is up a little bit, oil rallied. In fact, why don't we start with oil? I'm going to put oil in the chart. We're going to use the future symbol. We're not advocates for futures trading, but we're using it to understand trend and price. So that's why we're using the /CL. Please remember, futures are not appropriate for all investors. If you want to trade futures, you're absolutely capable of doing so here at Schwab. You just need to go through the requisite steps. So please follow those steps and get yourself approved if you're interested. We're up about 3.25% today, Jeff.
Mhm.
As it's a little bit unclear yet again, more headlines telling us that maybe the transportation Strait of Hormuz is not as open as we've been led to believe.
Yeah, it really is a news-driven experience with the oil sector, Kevin. I think that's going to continue to be the case, especially in the minds of a lot of traders. Without that strait opening up, we're going to have some issues and so on and so forth. Good headline moves one way, bad headline moves the other way. But overall, you did see a big jump going all the way up to about 115 or so on the oil levels. now that we've come back down, that 200 period moving average looks like it's just having a struggle bus trying to reclaim that point. And then you also have that 20 period crossing below the 200 period, meaning that short term came down a heck of a lot in a very fast manner, just blowing right past the 50. Now it's below the 200. I think that probably is giving a little bit of joy to those who are saying, gosh, gas prices were really starting to get expensive. I'm glad they're starting to pull back here a little bit, at least for those of us not in California at this moment. Um, but that is to say, Kevin, for oil traders out there, the idea here is, okay, we've come back down. Things are probably more in a neutral range, but still keep your eyes on those headlines, as that tends to be where a lot of the focus is for this particular trading mechanism, Kevin.
Yeah, you're absolutely right. Headlines are going to be driving here on oil. I loved your call out on the 20-day. It's pretty clear we're below the 20, or have been, since we've had this 20 cross the 50 to the downside, and we've actually been below the 20 dating back to about May 20th. And today is really the first time we've been above it for any extended period at all. So now right now it's giving us a doji, so indecision, but it's the first half an hour of the day, so difficult to validate price action at this point. We're going to see what comes from it, but I wouldn't be surprised at all if we get a little bit of a relief rally, Jeff, just based on this headline. And in truth, we clearly established a floor of support at around 68 once more, bouncing off of it. So if nothing else, we know where maybe the short-term equilibrium price is, and that might reside between, say, 68 and 70. But we'll keep talking about it in this class, as we always do. Let's talk about how it's impacting the energy space here. Energy rallying into the 50-day, Jeff. Again, huge moves on the year-to-date basis, but this is a pretty intriguing spot. What are your thoughts on what you're getting from either a pattern or the trend lines? What are you seeing on energy?
Well, one of the call out from me is everybody, can you guys all see this? Are you seeing what I'm seeing? Back in April, you had that low point come up, right? It came down, you got that almost a hammer movement right there. Yeah. That point just got pushed below recently, lending to the idea that this may be a little bit more bearish than this short-term bullish movement might suggest. We rallied nicely into this 50-period simple moving average, but Kevin, I would think without some sort of an agreement, it's going to be very tough for the energy sector to say, yes, let's go above and hold that 50-period moving average. This may be, I don't know if dead cat bounce is going to be the right name for it, but this might be a momentum trade that just doesn't have the legs that some traders might think it will. Just some of my initial insights. What are your thoughts?
Yeah, I'm feeling kind of similar, and we don't try to share feelings in this class. That's not the point. We try to fall into a detail that we can validate. The fact is, ran to the 50-day intraday today and took a brief pause. Right? Some traders would have, I mean, if you were the trader with the gust to step in at the lows on Friday in energy, expecting something like this, you're the trader who might be taking a 30-point move and saying, great, I'm happy. I made a great trade on an overnight basis. That's wonderful. Taking a little off at the 50-day. That makes some sense. It's also a gap zone, Jeff. We filled a gap level in there. So maybe this is the extent to the rally for a couple of reasons, right? Right at the 50-day, filled the gap. This becomes a spot for potential resistance to play out. If you were looking, Jeff, for maybe an area for a trend line bounce, maybe you could get through the 50-day and run into the zone above us. Notice there was also pretty clear resistance here where we failed previously. So this might be creating a spot for a trader who says, all right, if we can move through the 50-day, perhaps we could rally up to that last level of former resistance in the neighborhood of 895 to 900 on the index here for the sector.
Really good call outs. Yeah, I love when 2 points intersect. You've got that downward sloping resistance level, and then you have that horizontal resistance level at the same time. Yeah, be intriguing to see how this unfolds over the next couple of weeks.
Yeah, we're going to have to watch this one. We know that on a year-to-date basis, energy has done fantastically, even though it's done poorly for us for the last 2 months. Still up, I think it's 20% year-to-date. Let me just take a quick look here. 22% year to date still.
Nice.
So there you are, everybody. Energy back in the lead on a year to date basis, while tech is taking it on the chin of late. Let's talk about that industrial space, though, Jeff. I wanted to do that because this chart continues to be opportunistic here, Jeff. A couple of key technical analysis developments would be the break through former resistance right there. And then we rallied for 2, 3, 4 sessions, came back and tested our breakout. And Jeff, what I often point out is the common nature of these moves. Breakouts commonly lead to trends thereafter, which is to say, all right, we had this wonderful move to the upside. We broke down, tested a 200-day, had to consolidate in this window here, which we did. But once we moved out of it to new highs, look at what we're doing with the 20-period moving average. Suddenly the 20-day providing short-term support for the industrial sector.
Yeah, the thing I think that bull camp traders are saying is this holding of the 20 is a better hold than what we had off that previous resistance level, meaning it's a higher level. So giving a little bit more credibility to what's happening. Really good call outs there, Kevin. What would I be concerned with as a trader? If we have this breakout, as brief as it may be, if we have this breakout, but it can't hold that 20 period, you may see a faster movement towards the bottom, especially in light of whatever earnings announcements may be helping to drive that. So if you're saying, well, I'm going to hold this, but I might expect a small, slow stair step down to the 50 if it can't hold, I don't know that I could get in that camp. I would say you might be looking for the elevator as opposed to the stairs on a downward movement if we can't hold this 20.
Yeah, if we don't hold the 20, we'll probably speedily check back at that same low. The question then is maybe it's that low doesn't hold and we get some intraday fluctuation testing the 50-day prior resistance and so forth. There's lots of areas to be potential support even still in here.
Right.
So there's our look at energy and industrials. Another leaders on year to date. Would not have anticipated this, Jeff, but look, we've got real estate and materials in the top half. Here's the materials chart, which is doing well on a year-to-date basis, but appears to be in total consolidation, Jeff. This stands out to me. Maybe is this a story as it relates to the U.S. dollar, which has continued to get strong over this this huge move up more or less ran its course in March and then has been consolidating since, but the US dollar has continued to climb.
Yeah, it could be that. Just downward pressure happening. You could also see that there's just not as much upstart happening where you need those materials and goods to help propel what's going to be coming down the pike. The tell sign, I think, here is what's happening in real estate, and that is builders are still building. They know there's a shortage of housing, and so they're trying their best. But I think real estate, as opposed to materials, is more the story of there are so many folks out there that have a sub 4% mortgage. Nobody is moving. We are just sitting in our homes making upgrades. Every friend I talk to, I've got a buddy that just put in a pool. I got another friend that said I've moved out of my house for 5 months. I'm renting a spot. I am redoing the entire thing because nobody wants to lose that very low interest rate. Not enough has come online to help say, oh, good, the supply is starting to catch up with the demand. We can now bring prices back down. Prices are still staying high because the demand is there, but the supply has not yet come online, Kevin.
Yeah, that home construction chart that I just put up here now kind of speaks to that, doesn't it? The volatility here has been trying to figure things out, and the yield movement is also playing on the home construction. The real estate sector, when we look at it like this is going to be more tied to probably commercial real estate, which is also really insightful, though, Jeff, because the reminder is, first of all, heavy on real estate investment trusts, which carry a varied level of alternate risk factors. So please be aware of that when you're considering this space. But Jeff, the interesting thing to me is that real estate as a collective, along with utilities, which seem to be bouncing now, this is telling us, hey, maybe yields aren't going to stay elevated. The reason I say that is that these are two spaces that should be pressured when yields are going higher, right?
Yeah.
Because these are areas that traders would often move to if they thought yields were not giving them what they wanted in the way of risk-free rates of return. They're willing to take more risk by buying utilities because they pay interest and dividends, buying REITs because they pay dividends and interest. Jeff, there's something else is going on here. It is what it feels like. There's something happening that I don't have to be able to define necessarily, but I have to know that it's happening.
Yes. And this is us. Remember, we did this show about a month ago. We did the show a month before that. Yields were rising, but for some reason, small caps were just continuing to rally. And I remember I
Yeah,
was saying it to you and the viewers. I have no idea what's going on here.
yeah.
Very similar narrative coming out of the utility sector. Why are utilities rallying as yields are starting to go up? Why is there not more pressure being put on these counterbalances? I have no idea. And
Yeah.
so, what do you do in those situations? And it's okay as a trader and as an individual to just say, I don't know. Those are probably the three most powerful words in trading. When this happens, people like me tend to stay away from trades like this. I don't know what's going on. I can't figure out the narrative. I don't know what the story is. I just stay away from it. It's okay to say, I don't know. And so I'm not going to touch it, Kevin.
I think what it is, Jeff, is us commenting on it, knowing it, watching it, and then maybe using that on a consistent basis as a reminder that the market's always right. It's our job to get on the right side with the market. We don't have to get on the right side before we're comfortable necessarily, but it's a good reminder of why we do this 4 days a week, Jeff. I mean, this
Yeah.
is a conversation that having it consistently can help to kind of demystify the process a little bit. I thought it was really intriguing. We don't always look at utilities or REITs or real estates as sector, but I thought we should do so today. I do want to look at couple other spaces here. Real briefly, here's our staples. Still consolidating. We're not seeing a whole lot of defensive activity, even though we are broadening out our rally, Jeff. So I'll take that as a positive. The last one was tech. Tech
Yeah.
is intriguing to me. It's sitting on the confluence of the 50 and the 20. We've well established recent support down here. I think a lot of traders are comfortable, perhaps as long as these recent lows are held. But obviously, I think we would all prefer that 50-day right there holds up supportive for us in tech.
Yeah. Very, very helpful for the bull argument. We'll probably get an answer to what happens here, Kevin, in the next, maybe call it 3 to 4 weeks.
Yeah, I think you're right. Well, this week in particular, we have to talk quickly about financials because the
Yes.
financials are set to one of those is financials. There it is, everybody. So the financials, we're going to hear from a number of key banks this week here, Jeff. We're going to get not Key Bank, excuse me, but rather Bank of America, JP Morgan, Citi, Goldman Sachs, Wells Fargo. These are some familiar names in the banking sector that are likely going to help us understand what we can expect going forward from financials.
Yeah, yeah, you're absolutely right. Keep an eye on everybody. I don't know if you guys caught this. I'm going to show this real quick. This Onward magazine came
Yeah.
out. This was spring of 2026, and I'm hopefully I'm holding that up. You'll see this in the branches across the country. If you get a chance, check it out. But inside this edition, Nate Peterson of our derivatives team had talked about what do we look for when rallies are over. The number one sign, ladies and gentlemen and distinguished guests, when good news is bad news. So as you're
Ooh.
watching this earnings season start to kick off, if good news comes out and bad things happen, that could be your very early red flag moment saying, uh-oh, this rally has come to an end, Kevin.
That is a wonderful reminder, Jeff. Obviously, that magazine comes out, like you said, quarterly. We love that. Always going to get some interesting insights and articles there. Check that out, Jeff. We only have about 90 seconds, so I'm going to do something I normally don't do, and that's a lightning round. I'm just
All
going to
right,
throw out some symbols.
let's do
Here's
it.
a quick reminder of how to do this, everybody. If you want it, you can use the watch list, lovers and losers, analyst upgrades. Had a few of them come through today. I just wanted to give them to you real quickly. But one of them here, Capital One, HSBC upgraded Capital One to buy from hold in the same space. How about American Express? American Express was upgraded at JP Morgan to overweight from neutral. They give a new target at 400. That's substantially higher than the 328 previously noted. We also had a couple of healthcare companies in different areas. One, Humana, Wells Fargo upgrading Humana to overweight from equal weight, a new target. This is significant. 502 up from 227. Wanted to make that
Wow.
point. That's a very large adjustment. A little late in their effort since the stock is up beautifully, but nonetheless, an upgrade at Wells Fargo. And then finally, Biogen in that biotech space. Biogen was upgraded at Truist to buy from hold with a target at 235 up from 190. Not a lot of content additional there, everybody. I know I didn't give you, normally I like to give you a little more detail on those upgrades, but we were short on time and I wanted to make sure that we rounded out with some upgraded stocks this morning. Jeff, as always, love having you, man. I know we
Love
only get to
being
do it
here.
once a month, but great discussion, great conversation for our viewers. Thanks for being here this morning, man.
Truly my pleasure. Kevin, thanks for having me.
Always. And to all of you, thanks for being here and participating. Remember to follow us on X. Hit that thumbs up button for us below as we get this reviewed and into the archive as quickly as we can. Big thanks to Brent in the chat as well. And make sure you're subscribed to the channel, everybody. Much more to come from us today on the channel, of course. We'll get going back again at 11 a.m. Eastern, here 8 a.m. Pacific. So you've got a little bit of a break to get your morning set, get your coffee, get your breakfast, and then reconvene here at top of the hour. So with that, have a fantastic rest of your Monday, everybody. We look forward to seeing you all again real soon.